Hello, everybody, and happy Thursday. This is Tammy DaCosta with CoinW. Today, I'm going to be presenting. I'm hoping everyone can actually hear my screen, see my screen and hear me, sorry, because it doesn't seem like the audio was working yesterday, so I'm holding thumbs. But yesterday, I basically just went through what was the major risks that were facing markets. And what happened was, sorry, I'm having problems again. Okay, there we go. All right, so yesterday we had some big events, and the main events were basically the whole Federal Reserve interest rate decision and earnings. Now, looking at price action today for crypto, and we're looking at the top 100, it does look to be pretty positive. We see some nice moves, and we do see some moves for TIA. We see Bitcoin coming back above 105,000. So we see that sentiment is returning. And so now we can look at the events. I'm not going to take too much time with that. And then we will basically look at the other risks. And I want to focus on price action and a few strategies today. So if we want to look at the big theme yesterday was basically there were the interest rate decisions. So the Fed interest rate decision, where the Fed decided to keep interest rates at the current levels. So that was expected. So that wasn't a surprise. So it didn't really cause too much, talk. But what does play a major role there? Can my computer's doing its own thing? What does play a major role there is the comments following the Fed meeting. Okay, and then that is where Fed Chair Jerome Powell basically outlines what he expects the economy or how he expects the economy to perform. I did do a presentation, a quick one, just to go through everything. And then, so pretty much we can expect the rates to remain unchanged at the next Fed meeting, and that's on the 19th of March. So it's some time away. So now for the US, the next big data print would be tomorrow. And that's, today we've got GDP, and then we've got the core PCE, which is the Fed's preferred measure of inflation. Okay, and this all filters in to what's expected at this meeting. The biggest concern for me yesterday was let me add this to my stage. I hope this works. Okay, I hope you can see that. So was basically the earnings. And what we discussed yesterday is, okay, this is what the Fed said. So basically they said there's no rush to basically, take their foot off the pedal. There's no rush to reduce rates further. It seems to be working. Inflation isn't close to the 2% level yet, but it is showing promises of slowing. They said the job market is still strong, but more progress is expected. Now, I think the elephant in the room was obviously the whole situation we have between Trump and Fed and the clash between them. So Trump obviously wants interest rates lowered. He wants more economic growth and so forth. And the whole thing is, what does that do to inflation? And what do tariffs do to inflation? So Jerome Powell was addressed with this difficult question. He answered it quite nicely. He kind of avoided the, politics or the elephant in the room. And he basically said, we have to wait and see because, we on a wait and see approach. And that's been his standard answer since 2020 or since 2021 when inflation started being not transitory. So that's that front. And then we had the earnings. And this was my main event risk for yesterday. So we had Microsoft, Tesla, and Meta. Now, why it's important is, and I'll go back and show you, but basically because of the amount that's invested in these companies. For Microsoft, we had, and we're going to go through the charts as well once the presentation. It is quite quick today because I do want to look at the charts. For Microsoft, what we do see is we had basically a revenue and estimates beat, but the forecast with regards to its Azure product and its cloud service wasn't really as expected. And that's because of that data infrastructure that they said they really, really desperately need. So that is weighing on the share in its pre-market. Now, what does that, how does that tie in to crypto? Well, if we look at Microsoft has been using the blockchain technology, especially in its Azure line and its cloud processing. So that is why these tech giants, their earnings are important. And it's not only because of the impact it has on sectors such as like stock markets and just on global trade, because there's a lot of investments in these companies. And a lot of these companies are also the ones that have been driving the need for that research and development into blockchain technology. Okay, so there we had an earnings beat, which was positive. However, like I said, the foresight wasn't as positive. Tesla, we had a miss. However, we did see, and obviously we've spoken about Elon Musk and his role as the Department of Government Efficiency and so forth. And he's been a big part of the development for cryptocurrency. And so that matters. But his forward guidance, he said some really, really, really like powerful things. So basically, he says autonomy isn't going to double or isn't going to double down. We're talking about 10 times. So the models that he's talking about are basically, he even spoke about not only autonomy, like with driving cars, but basically getting food delivered at night, and all of this is going to be through robotics. He also then went on to say Tesla is not only going to be the most powerful or valuable company in the world, Tesla is going to be worth more than the top 5 companies combined. Okay, now those are big statements. And if you look at the mega 5, so you're looking at Microsoft, as we said, market cap over 3.29 trillion. Tesla, 1.6 trillion or 1.2 trillion. I had it yesterday. But anyway, you get what I'm saying. So with Elon Musk saying this, obviously, Tesla is going to get a push from the Trump policies as well. So we're keeping an eye on Tesla. Elon Musk is also a big holder and advocate for crypto. So he does matter. Okay, lastly, we also had Meta. Now, Meta also very, very good in their earnings and revenues. That shares up as well. And all of this, if we look at what it all tied into, was once again the future of AI. So that AI theme, that tech theme is still ongoing, and crypto is in that partnership. So it's all very good, actually, as a whole, although I do expect some bumps along the way. Okay, now we have to look at the blockchains. And this is where, and we've said before, is where like basically the true value of cryptocurrency or digital assets lie. Okay, so if we go and we turn to markets again, we've also got Apple earnings today, and Apple is also a big advocate of blockchain. So I do think that Apple, and especially when it comes to Apple and its AI, their blockchain technology definitely does also have a role to play. And it's all about to see which of those blockchains are going to be used. Ethereum is a good one. A lot of companies, a lot of your big tech are already using Ethereum-based blockchains. And then if we look why this matters, is Apple is worth 8.93% of the NASDAQ. Microsoft, 8.3%. NVIDIA, 7.45%. And these market caps are more than a lot of the global economy's gross national, GDPs combined. So that's why it matters, not only for the US, but for markets as a whole. Now, I'm going to look at the charts, because those are the fun things. Okay. So I'm going to start backwards. If we look at the NASDAQ, I don't know if you saw this again. Sorry. Okay, there. You should be able to see my screen now. Okay, so we're looking at the NASDAQ 100. So these are the tech stocks. And if we look on my watch list, and that's on the right, we're going to NASDAQ 100. Let's go to big tech stocks. Okay, and we could see that Apple is currently, and remember, these tech stocks are currently pre-market. The US market isn't open just as yet. So if we look at the price action, we can see, okay, yes, we've had also those higher highs. We've just had that tech and AI boom has definitely triggered the rise in technology. We saw this gap here, and gaps are important. We saw the same sort of gap here, and these are basically exhaustion gaps. And that's to say the uptrend is powerful, but basically, well, this was kind of like a tiny breakaway gap, and then you get the breaks down. So now we see the momentum from like at the end of December. Momentum was definitely picking up, causing those prices to go higher. However, gets to a certain point and then retraces. Then we had that pullback again, and then we had a gap here, okay? And this was on Friday, and this is from Monday. So remember, if we're looking at this, this is the futures. So the gaps are often because of the weekend, so there's no trading. But what matters now is the fact that those gaps still haven't been filled, and we've still got Apple earnings. So this is for NASDAQ, represents the top 100 companies, but it mostly represents big tech in the US, which is why it's really, really important. So that is something we're looking out for. But if we look at why I'm showing you these patterns, is because as we go through the list, you're going to see how much these two are interlinked, these two sectors. So we see the NASDAQ, and then we're going to go look at Bitcoin, and we're going to go see how these are interlinked in terms of, you know, how they correlated, as well as potential strategies. So now we see Meta, okay? And if we look at Meta, so Facebook, the parent company, we can see their prices. So basically, it was positive yesterday. And then we can see pre-market, we are expecting prices to open higher in the pre-market. And that's because of those earnings being reported after the market close. So obviously, a lot of that sentiment now filters through to the next session. So once again, we are still very bullish on tech stocks. And if we look at the amount of funding and everything, we had the DeepSeek jitters at the beginning of the week, but that's pretty much like gone and dusted. Like it's not, I think more of a concern is around the security and the leak of this information, or the potential leaks, than it is, you know, the actual fact that now China has its own open source AI that is efficient, or basically it's very effectively priced. However, if you also look at the intention or the purpose of these blockchains, for the US, it's not really primarily, okay, yes, open source is going to be a big thing, a big drivers, but a lot of them want their closed source, especially when we look at military and everything like that, and the role that this is going to play in then those different sectors. We know Elon Musk he is an advocate, as I said, not only of Bitcoin, he also calls himself the Doge Father. He's now the Department of Government Efficiency while he runs it. And this all matters because he basically uses blockchain and blockchain technology for his automations as well as for his electric vehicles and so forth. So we can see, okay, Meta is up. So this would be a good sign for the NASDAQ because it's got a big weighting there. However, then we have to go to Microsoft. We can see Microsoft is down. And remember, Microsoft's earnings and revenue, it had a revenue and estimate beat. So if you look surprise side for the earnings, it was up 3.89%, so surpassed expectations. Same as with revenue, surpassed expectations by 1.11%. And yet that share in the pre-market is trading at 423. And that would be down from the close at around 442. So this is all going to impact the NASDAQ and so forth when those markets open. Okay, so we're just going through some of the price action and why it matters. And with Tesla, so remember, even though it was a revenue and earning beat, the share is still down. And that's all because it's now based on what happens next, what happens in that next quarter. And if you look at the hourly chart here, you can see there was a huge breakdown also from Friday to Monday. And then on Monday, that was the whole DeepSeek, and we saw a lot of prices gapping, especially with big tech. But now we saw yesterday that gap was filled. So we call it more of like a fake it. And now we're looking at a new zone of support. And that was pretty much previous support over here. Okay. So these zones become important for stocks and then for the indexes as well. Tesla. Okay, so these are all, like I said, the purpose of this is kind of just for information purposes. Tesla, we can see as well yesterday, there's a pullback. The earnings and revenue miss, but yet pre-market, it is expected to open higher. So these all play in to the expectations and then obviously into what happens now as we go into the US session. Okay, so this would be Tesla. And then from there, if you were actually analyzing the stock, you could obviously get important zone support, resistance, and so forth. Looking at the overall stock market, we see for the US market, now remember, Apple is going to be reporting today. So this is a big, it is also important. And I am looking to see what they say with regards to blockchain technology and so forth. Okay, now let's get on to crypto. So Bitcoin, actually, I don't want to start with, no, I do. Okay. For some reason, these colors, I think I got the wrong layout here. But anyway, so if we look at Bitcoin, what we saw yesterday, let's look at the levels we were looking at yesterday. Okay, so we had that gap. We've discussed that in depth, and that was from the inauguration, the presidency, so forth. We then had that pullback. This is now support. And then, okay, we had that high there. Prior to that, we had the 108. Let me get that. Then I can get to what I'm actually going to. All right. And this is just for me to also get the tops, because I can see here there's tops and the bottoms. Okay. So here's another zone of support. That was on Monday. And this was from also the DeepSeek, and just a lot of action or activity happening there. And we can also see that if we look at the liquidity heat map. We'll look at that later today. Okay, so we're looking at Bitcoin, and Bitcoin I didn't say I was going to focus on today, so this is why. Okay, so now I've got this zone to play around with. What I could even do is try to do something like a fib from here to here. Okay. And I can see that these levels are now really important. So from the daily, we just passed this level, okay? But we haven't cleared this part yet, which was Friday 24th. So this is going to be our next target if we are on the upside, okay? And then on the breakdown, so if we are long, we want to basically, or to basically get that confirmation, we need to be careful when prices come here. If prices go up above that level, because you can see here, it also touched a new high, but quickly came back down there. So this is the level of trading, and this is a big zone for liquidations, where a lot of people then take profits and push prices back down. So this level I'd be looking for as resistance. Now remember, this is a daily chart, so we're still going to go into a shorter time frame. On the support side, then we've got the 38.2% retracement, and that's of the 13 Jan to the 21 Jan. Okay, so this is the January move, and then we're going with those levels. So this then becomes the next big level of support, and we can see over the past few days how those, well, even the past few weeks, we can see how that those levels have actually come into play and have formed quite big zones. So once again, we had this gap here because of the futures, so it's not showing the weekend trading. So we had the Friday, and then we had the Monday, and this is just showing a significance of that buying pressure increasing. We then filled that gap, and now we back trading back above that 105,285 level. So the trend is still bullish. We can see the CCI is going towards overbought territory, but if we had to add moving averages, for now, we're still bullish. If we wanted to look at shorter time frames then, so we've now got those key levels, we can go to something like the, okay, I would usually go to the 4-hour chart first, to be quite honest. Okay, so now we're on the 4-hour. We can see once again that there is a period of consolidation here. Once again, we saw that gap, and this is now very close to that same level that we were looking at. So if I wanted to go from the 4-hour time frame, I could say, okay, now for bullish continuation, what I want is I want to see some momentum coming above that 106,635 level. Okay. And this would be the long setup. So if it was 106,635 on the long side, and say now prices managed to break away from there, I could put a enter. I wouldn't put my entry at like 106,635 because there's still the potential for the retracement. But what I could do is look at another level, for example, just above that, and we could look at, okay, this is still quite, you could do like 106,640, for example. So just above that last candle wick, and then you could look for the long side with your potential, your first stop, well, I mean your take profit at that 107,485. So this would be, and then let's just see how this is going to be. Okay. And then you could put your stop loss, if you wanted, just below that wick, so at around 105,800. But that would be for the short term. And obviously, you need to be aware that it's a 4-hour chart. So that might actually be more of a swing setup. So your stop loss, okay, would be around 105,800. Okay, so this is if you were just looking at this move here. But this is just to see potential. So we're not committing to anything just yet. Okay. And we said, let's go take profit 1. Uh, 106,900. Okay, but obviously you want to do your risk and reward properly. So for example, say now that's our position, or we're looking at this chart. What we can see here is, once again, 4-hour chart. This says, okay, bullish momentum. Yes, prices have been rising. Look what happens here. It stalls. Over here, we did get a crossing above the 200, and that's for the CCI. CCI is the Commodity Channel Index. It also is an oscillator. So it's similar to RSI, but it ranges between negative 100 and positive 100. Anything above positive 100 is a sign, can be a sign of overbought territory. And that's when we seem to see a bit of those pullbacks. Anything below is generally oversold territory. And things like this, you need to remember when it works. So these work well during trending markets. So here there is a momentum in play, and that momentum has been the bullish momentum. We can see it here. We can see there is still bullish momentum. When these indicators don't work well is when there's periods of continuation, consolidation, and there's a tight range. So let's see, for example, if we said, okay, here we already got the overbought territory. So here, some believe that once this crosses this line, that could be sign of a pullback. This candle here is red. But now we have to see, or we have to wait for the next candle because we need to see where this candle closes. If the next candle opens and it's red, it could potentially be a short-term setup for a reversal, or at least some downside. So this is the setup that we see 4-hour. Okay, but now let's go 1 hour. So now 1 hour, it kind of solidifies the importance of this level here. Because see, not only did it is it acting as like the daily resistance, but the whole morning, it's pretty much been like it's holding, okay, there, 106,700 makes things easier. So 106,700, not only is at a psychological level, we can see before that we had a doji candle, which was also basically we attempted to reach that level. We had a pullback, an area of indecision, and this is when prices go back down that zone, and this is from the hourly time frame. Now we've got it underneath, potential for a further pullback. And then if we did enter a short position at, for example, 106,000, we could then look at profit or take profit at this 105,285. So currently, to be honest, that would probably be more of a setup. Okay, 285. And then we're going to need to, so entry. Let's just see how this works. So if we have to have, okay, I haven't entered yet though. I'm just like setting this up to see. So this is potential. Okay. So if we wanted to enter around there, 106,000, we would have already entered, or we could, if we wanted to put an entry like just below. Another thing is to actually put orders at psychological levels. A lot of the time, psychological levels do actually play a role in, you know, we had basically, if you look here, but if you look at previously, I mean, that 100,000, that 90,000, those have all been key levels that have kind of prevented or halted the momentum of those trends. So you need to be careful as well when using psychological levels. If I am going to place an entry here, okay, fine. Even now, I could basically go short. I could say this is going to be my immediate profit zone. So this would actually be my take profit zone if I was going short. And then if I was going short, then I would place that 106. Yeah, so I wouldn't want to go as far as 106,700 for the short term. I would probably then go basically just above this candle or just above this close. So maybe 106,400 so that you get that good risk to reward ratio. And then this would be your take profit. So there are still potentials for example, Bitcoin. But once again, we have to be careful because of that institutional adoption. We have to be careful of what's happening on those wider time frames. So currently, the hourly chart to me is looking bullish. To bearish. Overall, obviously, the underlying trend is still bullish. Prices are now, if we do have some upside momentum though, there is more chance of, if there's a breakout of 106,700, then I do think there's definitely potential for a retest of 107,485, and then we can go into looking for those retests of those other highs. So those earnings are a catalyst, but as it stands, looking at this price action, this is the setup that I'm looking on the short-term chart. If I wanted to go even shorter, then we could always look here at the 15 minutes, and I can still see, to me, this still becomes an important zone because of prior price action. And then we can kind of see more imminent zones of, you're expecting with short-term charts, that's the thing, you're expecting a lot more noise because the information that's in one bar is a lot, smaller. So this is showing you the information and the price action of every 15 minutes, whereas the daily is taking out the noise, the short-term fluctuations, and it's showing you that daily, basically trend. But let's go to Solana. And actually, these were the ones I wanted. Let's go to Doge, because I spoke about Doge yesterday, and primarily because of Elon Musk. So if we look at Doge, this was my setup yesterday. So basically we had so once again, we can see that big uptrend. And to me, I'm interested now, this move, the 20th of December, I can see this area is now a big level of support. Okay. And then, where was I looking at this? Okay. And then to me, these two candles were extremely important because it's on the daily chart. So once again, prices try to go up, they try to break down, they retest that same support zone that comes into play over here. Okay. Well, let's move this. So we can already see some strong zones that have been showing. So we've got this wick here, and this is now going to be the imminent support. We saw the other day that prices tried to okay, so coming back from the 18th of Jan, we did see a pullback in prices. We see that there was a potential, or prices did try to get below the there we go. It got to a low of 0.305, but then it didn't stand there, because you can see quickly that the body of the candle is right at the top. So this is a bullish reversal sign. And then we did see further pullback though, and then we saw a retest of that same zone. So currently this zone lands up staying as resistance. So yesterday, this was my take profit zone. And so the take profit would have been hit. And then at this point, you see what's been happening is we keep getting that pushback. So for me, I would be skeptical to go long until the zone is broken. So potentially maybe at 0.33, let's see. Like there, I could be looking at a break, or I would at least want a close above that 0.33, let's say 0.336 for some confirmation. Okay, but we can see once again, there are two bullish signs. So it could be a 2-day reversal, but not really, because it is still under or still within Tuesday's body, Tuesday's price action. So it hasn't turned bullish for the immediate trend just yet. Okay, we could always go look at a shorter time frame for Doge. And I was looking at the hourly. I quite like this. So we can see on the hourly, once again from that 18 Jan, we can see that, and this was when I drew it the other day. So there is still that noise here. So now we can draw, since it's breached, okay, we had that and that. So it's broken above that trend line. So now we still want to we want to make sure we can connect the upper bounds of those lines, okay? So now that we do that, and we can see, okay, from the Jan 18, and then we can see 1, 2, 3, okay? On this time frame, yes, we can see that it has been touched, so it's still intact. What do we see here? We see now an area of consolidation. And this is a strong zone of consolidation because we are getting consecutive, the candles, the bodies are small. And for this one to break, we need to actually, once again, this is still bullish, bearish in my opinion for the short term, because we would need to get prices back above there in order to justify the bullish continuation. It has to first break through that short-term resistance before we can actually start seeing some momentum on the longer time frames. Once again, we can use these other areas where we can see that there has definitely been pushback, and we can then use those areas as additional zones of confirmation. When we are looking at other things that we want to use for entry, exit points, or just for the general momentum of the trend, something simple like the moving average. And we want, for example, I want the 100 hour or the 50 hour. And I want the 10 hour. Okay, so these are hourly, and we see currently prices are basically, they're still above the 50 hour, okay, and they're trading just below the 10 hour. So we can do things like this, or instead of a 10 hour, we can make it the 24 hour, and that's the same as the daily, the daily candle, the 1 day. Okay, so from here, we can already see that there is a zone of consolidation. When we're looking at the 4-hour chart, we can see that there is still the zone of, I didn't even do 4-hour. Okay, when we're looking at 4-hour, we can still see there is that zone that is extremely important as resistance. For now, I don't want to go towards the long side because there's resistance. If we pass by here, and generally in these scenarios, what we do is the longer the consolidation period, the more pressure, because it's showing, okay, what happens at these zones. So prices fall. Okay, prices now are attractive because now they become investors that basically enjoyed this rally, may have sold, and now are thinking, okay, let's get back into the market. So on the downside, firstly, the shorts are, okay, they're enjoying the ride, but those that bought here are going to face liquidation because they can only hold on for so long. And then as prices get here, what happens? Everyone's like, okay, look at what happened from the 13th of Jan to the 18th. So now, is that going to repeat itself? And so you get this whole battle between, okay, cool, here's a buying zone, here's a selling zone. And you see this very nicely on the liquidation maps, and we will look at that in just a second. So for Dogecoin, there's also, you could enter, like I said, on the short side, you may want to see if prices actually break that zone, but at the moment it has been tested a few times. So to me, this is a very strong zone of resistance. So I am more for a short-term further pullback before we actually get that catalyst towards the upside, if we actually get it. Did I do Ethereum? Okay. Ethereum. Well, this one's a messy one. Sorry, this is the head and shoulders. Let's go there. Turn. So this is my daily for Ethereum. This is the Bollinger Band, and it measures the standard deviation. So 2 standard deviations from, and this is the 20-period moving average. Standard deviation is basically your measure of volatility. So when volatility increases, and that's more like your fear, when it increases, then you see these bands widen, okay? And then what this does is it acts as basically a buffer against extremities. So when these bands are wide, and then, for example, here you see there's a price gap, prices break above the upper band, and that obviously causes, a reversal in the prices, at least in the short run. Now, for Ethereum, this is what, there was a very nice thing. If you don't understand why like interest rates and things like that are important, this shows it nicely. So let's look at the 1 hour time frame for Ethereum, okay? And now let's look at let's look at, so yesterday, if we zoom in, yesterday I also spoke about this zone. And this zone was important to me because previously, with prior market gaps, it has actually played a major role. And here has been a gap. And you see how those Bollinger Bands have helped as well. For example, here we saw prices gap, once again over the weekend. And now, instead of we seeing prices up, we saw a continuation of that, like basically a bloodbath. And that was by the lower bound. But remember, this is the hourly time frame. So this is going to give you more noise, more signals. So you don't want to use this. Like I use more Bollinger Band for, like on the 4 hour time frame, I find it works nicely. And then also to determine potential entry and exit points based on, those bounds. But if we look here, for example, can you see this wick over here, or this candle specifically, the hourly candle? Now, look at the time. So at this time, it was 7 o'clock UTC. That was the same time the interest rate decision was announced. So you can see that it definitely, and if we had to look at a short time frame, such as the 15 minutes, I'm sure we'll be able to see it quite nicely there. There we go. So we see here, this is when the Fed decision is announced. Okay. We then see further pullback. Then that's the Fed press conference. And we can see how now markets return or prices return. And then once again, we had this price action here. And this was also in terms of the earnings and what happened there. So there is definitely an interlink and a correlation when we are looking at all these things. Lastly, Litecoin. Litecoin has now been approved by the SEC, it seems. So Litecoin is having a really good day at the moment. We can see prices are up 13.32%. And now we do have, because now we've got a change in the fundamental picture as well, we would have maybe a potential for a continuation if momentum increases to test the 147. Before that, though, we still have some strong zones, and that would be, well, these are the dailies. Once again, we would have to look on the shorter time frames to maybe see potential, support and resistance zones. For me, I'm already going to take the daily low, and then because already this is quite a big zone, and then this would be support for if prices basically pull back. So if we look now on, but if we take a further time frame, okay, so this 18 Jan. Let's make these. Okay, so these are the highs I'm looking at. Just do that. Okay, and this is on the resistance side. And I could even take something like this because it's still, we can see it still had an impact there. So the long side, then I could be looking, and basically I would like a break of 13496, and then there's potential. So these are my key resistance levels, and then we can always look for our key pullbacks. On the pullbacks, for the pullbacks, we wouldn't, if we're trading intermediary or we're doing swing or scalping or whatever, for example, here, this to me is now a critical area. It was prior resistance, we see here, and then it's fallen, and now becomes immediate support. Okay, what fascinated me, or what's important here, is if you look at this line here, or this price action, and once again 4-hour chart, we can see when prices came up here. So this pattern is, so basically this bar fully engulfs the open and the close of the next bar, and then we see the breakdown. Okay, so this was a bearish reversal sign. Once again here, we can see the pause, and then the upside is, this is a bullish engulfing because it fully engulfs the previous day. And then we can see those patterns. Now we've had, a few days of good gains, or at least like one day of really, really positive gains. And now it becomes about momentum and looking at where to from here. So the SEC approval, definitely a good game changer for Litecoin. However, in terms of trading, what do we want to look at to facilitate further momentum? And if we want to look at momentum, we can look at something like the RSI. So let's look at the relative strength. Okay, relative strength, we can see it's potentially going into overbought territory, but this also means that the fact that the relative strength and prices are in the same direction, it's basically confirming that the bullish trend still is intact. Okay, for the remainder of the day, what we are watching is those Apple earnings. And then what we also want to look at is, let me just go to the other screen. Let's fix this. All right, so we've got the ECB interest rate decision, okay? And that is at, wait, let's see what we've got. All right, so employment data we've had. Okay, so we've got ECB interest rate decision with the European Central Bank, and that will be at 3:15, and that is, or actually 1:15 GMT. GMT. And then you've got, after that, at 1:30, you've got the US GDP. So that's also going to be high impact data. And after that, we've got the ECB press conference where Christine Lagarde will basically give her statement. What I'm looking at there is what she says about crypto and about this whole AI thing, because the European Central Bank have been quite quiet about their stance with regards to everything. So if they are optimistic, then maybe we see some, a little bit of a push again. But that is what I'm looking at. But my focus, once again, is on those earnings. And that will be Apple is reporting after the close. Okay, thank you, everyone. And I will see you again tomorrow.